Welcome to Finance Decoded. In this video, you will learn about the Help to Save savings account, including are you eligible, how the account works, an example bonus payment, what are the tax implications, whether your money is protected, and finally, what are the pros and cons. This video is part 3 of the Ultimate Guide to UK Savings Accounts series, where we will cover the following savings accounts. Click on the link above to watch the rest of the series where the other accounts are explained. Help to Save is a savings account set up by the government to help those on low incomes build up their savings. To be eligible for this account, you must either be 1. Receiving working tax credit, 2. Entitled to working tax credit and receiving child tax credit, or 3. Claiming universal credit and your household earned £604.56 or more from paid work in your last monthly assessment period. You also need to be living in the UK. However, under the following 2 circumstances, you can open an account whilst living overseas. 1. You or your spouse or civil partner is a Crown servant, or 2. You or your spouse or civil partner is a member of the British Armed Forces. If you receive benefits as a couple, both of you can apply for individual Help to Save accounts. Note, joint accounts are not available. So let's look at how the account works. Each month you can save between £1 to £50. You can pay in as many times as you like, but the maximum amount you can deposit is £50 per month. Note, you don't have to save each month, but this will affect your maximum bonus payment. Also, if you don't pay one month, you cannot roll this into the next month. So let's say you only pay £25 in October. You can still only deposit £50 in November, not £75. With the Help to Save account, you receive 2 tax-free bonuses, one after 2 years and another after 4 years. Both are paid into your bank account, not your Help to Save account. The bonus at the end of year 2 is 50% of the highest balance you've saved over the last 2 years, whilst the bonus after 4 years is 50% of the difference between the highest balance saved in the last 2 years, so that's years 3 and 4, and the highest balance saved in the first 2 years, so years 1 and 2. After 4 years, your account will be closed. Before we look at an example bonus payment, there are 4 important things to remember. 1. You have until September 2023 to open an account. 2. You can only open one Help to Save account. 3. You can close your account at any time, but if you do this early, you will miss out on the next bonus and you will not be able to open another Help to Save account. And 4. You can withdraw and will not be penalised for withdrawing, but it will limit the highest balance you are able to achieve and as a result will decrease the bonus you will receive. We'll look at an example to illustrate this. In this example, we have a couple, Jim and Sally, who both open Help to Save accounts on the same day. They both pay in £50 each month throughout the 4 years they have the account. However, after a year and a half, Sally withdraws £500 from her account to pay for some car repairs, which means her balance falls from £900 to £400 during June in year 2. So let's calculate the bonus paid after year 2 for Jim and Sally. To do this, we find the highest balance in the first 2 years. For Jim, this is £1,200, and for Sally, this is £900. As Sally made a withdrawal, her balance is lower, but remember, withdrawing doesn't prevent her from getting a bonus. So Jim gets a bonus of £600, which is 50% of £1,200, and Sally gets a bonus of £450, which is 50% of £900. So by not making a withdrawal, Jim has gotten an extra £150 more than Sally. To calculate the second bonus, which is received after 4 years, we take the highest balance in the last 2 years and subtract the highest balance from the first 2 years, and then multiply by 50%. So the highest balance in the last 2 years for Jim is £2,400, and for Sally, this is £1,900. Let's work out Jim's bonus. £2,400 minus £1,200 equals £1,200. £1,200 multiplied by 50% equals £600. So Jim received a £600 bonus after year 2 and a £600 bonus after year 4. So in total, Jim receives £1,200 in bonuses from saving £2,400. For Sally's bonus, £1,900 minus £900 equals £1,000, and £1,000 multiplied by 50% equals £500. So Sally received a £450 bonus after year 2 and a £500 bonus after year 4. So in total, Sally receives £950 worth of bonuses from saving £2,400. So Jim earns £250 more in bonuses than Sally. So as you can see from this example, with the Help to Save account, it's best to contribute as much as possible, so £50, and not to withdraw in order to receive the maximum government bonus, which is £1,200. With the Help to Save account, no tax is paid on your Help to Save earnings or bonuses. Also, your Help to Save account will be held with the National Savings and Investments. This is backed by the government, so your deposits are 100% safe. The main advantage of this account is the 50% savings bonus earned at the end of year 2 and 4. Additional benefits include the flexibility to pay in when you want, and you can withdraw without being penalised. Also, you only need to be eligible for the Help to Save account when you apply. So let's say after a month of having the account, you are no longer eligible for the tax credits or universal credit. This will not change anything. You are still able to keep the account open and receive the bonuses. Therefore, if you qualify but think your circumstances may change soon and you will no longer be eligible for those benefits, it's best to apply straight away. However, there are disadvantages, such as a £50 monthly limit. Also, if your Help to Save account combined with your other savings exceeds £6,000, this could affect your benefit payments. Lastly, withdrawals can take around 3 days, so bear this in mind if you need instant access to your savings. That said, the pros far outweigh the cons, so if you are eligible for the Help to Save account, open it. So that's the Help to Save account explained and part 3 of the ultimate guide to UK savings accounts. Thanks for watching Finance Decoded and stay tuned for part 4. If you enjoyed, then give the video a like. Want more? Subscribe below. Thoughts? Comment below and leave suggestions of videos you want to see next. See you in the next video.